Hi everyone. Today let's talk about Meta earnings. Then we'll go over some First Republic news. Then we'll go over the economic and earnings calendars. Then we'll go over the charts. Then we'll go over my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So once again, Facebook beating expectations. We had a big beat from Microsoft yesterday, which pulled up lots of other big tech names. Now we have Facebook popping 10% on better expected revenue and earnings. You can see earnings per share, $2.20. Revenue beat by $1 billion. Seems to be a trend here. Daily users also increased by 300 million. Monthly active users came in as expected. And they continue to talk about the year of efficiency here for Facebook, which is interesting since they did spend a lot of money on the metaverse, but they're back to making pretty good money here with their core business of Facebook, and that seems to be leading the stock higher. You can see they've been trimming the fat around Facebook. They talked about 21,000 expected job cuts. They've definitely already done some of these cuts. And revenue expectations were 26 to 28.5 billion, which they continue to do well. We talked about Alphabet yesterday and how they have been doing well with their online marketing, and they did well on their earnings. And here today we have Meta doing the same thing, everything continuing to go well here for big tech, and that continues to support the NASDAQ in my opinion. Moving over to First Republic, it's time to talk about them again. They've been in the news recently. We've talked about this bank potentially going bankrupt before, but things had gone quiet and they got quite a bit of money put on their balance sheet. But then they talked about how much money is getting drawn out, and it's a lot. They were down 31% here on Wednesday after being down 50% on Tuesday. The stock has fallen more than 90% year to date, hitting an all-time low on Wednesday with multiple halts for volatility. It's been absolutely huge here. You can see on this monthly chart, we were up around $14 just a few days ago, and now we're all the way down to $5.69. If we put this on the 5-year chart, you can see we were all the way up at $219-ish at the highs going back to November of 2021. And now we're basically at zero in comparison, down at $5. They talked about the fact that they lost about 40% of their deposits in first quarter, which is starting to look like the same bank run that put Silicon Valley Bank out of business. And that's despite the fact that 11 larger banks put $30 billion into First Republic in an attempt to instill confidence in the bank. But that doesn't seem to be working out right now. So keep an eye on this one. If First Republic goes down and the Fed lending facility is unable to save a bank like this, then maybe there's some others lurking that we just don't know about quite yet. Moving over to the economic calendar for today, I just wanted to highlight that durable goods orders came in much better than expectations here at 3.2% versus 0.7% expectations. So there's still some decent indicators of some economic strength. And then on core durables, we were expecting minus 0.2% and we ended up getting 0.3%. So pretty big steps up and much better than expectations. Moving over to tomorrow, you can see GDP quarter over quarter for the preliminary release. You can see that's at 8:30. Jobless claims always here on Thursdays. Core PCE prices also coming in tomorrow. Then we have pending home sales at 10 o'clock. And just for a reminder, we have PCE price index on Friday, as well as personal spending coming out at 8:30. Looking at earnings for tomorrow, you can see Amazon, MasterCard, Eli Lilly, Merck & Co., AbbVie, AstraZeneca, T-Mobile, Comcast, Bristol Myers, AMZN, Honeywell, Intel, Caterpillar, and Altria, Northrop Grumman. Quite a few big companies still coming out here on Thursday. Moving over to the S&P 500 here on the 1 hour and the 4 hour, you can see we sold off pretty dramatically, made a much lower low here today. Looks like we're coming back into this 405.29 level that I was watching. I expected to get there today. We talked about that in yesterday's episode as being a potential area of support. Now we're retesting that level and it still looks weak to me. I would expect that we're going to come down to the 200 SMA on the 4 hour chart sitting at 402.46. That would be about 0.75% lower than we were today. We are getting a little bit of a perk up here with Meta earnings, which was very good again. So we had Microsoft and Meta earnings doing very well. Alphabet was also pretty good here, but those few big tech stocks are not really able to hold up the entire S&P 500. And we are continuing to see a little bit of a sell-off. Big big volume to the downside at the end of day. And realistically, I expect a very similar move tomorrow as we got today. Big rally into earnings, kind of chopped around, found resistance, and then ended up going lower. We do have a gap going down to 401.37, looking back at the end of March. And then if we take out that level, I'm watching 399.25 as the next lower level of support. Moving over to the NASDAQ on the hour and the daily, you can see we ended up making a higher low here today versus yesterday. We did have a lower low compared to that pre-market low, but again, we had very strong earnings and Meta is a bigger piece of the NASDAQ. This is rallying back up to resistance above this trend line. 313.92 is my next level. We get above here, then I'm going to be looking for a push up to 315.98. This is still a short-term downtrend, but a longer-term bull trend. And then looking at the daily candles here, you can see an inside day, which tends to be a bullish pattern. Momentum is still bearish and RSI is still bearish on the daily chart, but big earnings back-to-back here. I would expect this to end up going a little bit higher in tomorrow's session. Moving over to the Russell and the Dow on the daily charts here, you can see the Russell gap down, filled the gap, and then closed lower. We ended up closing below that next lower support, looking at 170.35 here to the downside. If that level breaks, then I'm watching 167.47. Overall, this cratering and continuing lower. Momentum bearish, RSI bearish on the Russell. Moving over to the Dow here, similar thesis. Big red bar followed by big red bar. Looking at the 55-day moving average, sitting at 331.66 as your next area to watch. If that level breaks down, then I'm watching 329.40 as my next level of support. That also coincides very closely with the 144 EMA sitting at 329.08. If we get into that zone, especially in a straight push like we've been seeing, I would certainly expect to see a little bit of a bounce and a retrace before we get a continuation lower, especially after this rally that we've had. To be clear, I do think we are going lower, but if we get super extended like we would be if we continued like this for another day or two, then I would be looking for a bounce before we got a continuation lower, filling some of these gaps that we saw on the rally. Moving over to Apple and Tesla. Apple continues to hold. We tested that lower level of support that we tested going back on Friday the 21st. Found some support and then continued sideways, rallying here after hours. Again, big tech earnings have been very good, and that continues to prop up these bigger names. Tesla, on the other hand, looks extremely bad. Broke down again here today, and really this is the move that I expected yesterday. It held up pretty well yesterday, but then we had that bigger move down, so we went from about 160 down to 153.75, looking for that gap fill around 144. We're in the gap now, testing that lower wick, and like I said, 144 is the gap fill, and I don't think we're going to stop before we hit that gap fill on Tesla. Moving over to Microsoft and Activision, we talked about the UK blocking this deal for Microsoft to purchase Activision. Microsoft still holding strong right at this trend. Does kind of look like an island setup if it wasn't off of good earnings. This might sell off a little bit, maybe retest these highs here, but Microsoft very strong on earnings and you expect this to hold up. Activision here, you can see that massive gap down that we got on the announcement. Hit this trend line. We talked about it in the morning as an area where you might find some support. If this level breaks, I'm watching 71.72 down at these previous lows as an area of potential support. You can see massive bearish volume on the day. Went straight to oversold conditions from overbought conditions on the daily chart. So huge swing. Certainly could go lower. Definitely want to be patient here on Activision. Moving over to Amazon and Meta, you can see Amazon propping up here after hours. Not as much as the Microsoft earnings, but you expect them to do well here now based on the previous earnings. Meta, on the other hand, looks even better than Microsoft, taking out these highs and going much higher. We went from about 210 all the way up to 235 now, so looks very strong going into tomorrow's session. And between this and Microsoft and the strength seen across big tech, I'm starting to think we're going to see an update on the NASDAQ tomorrow. So keep that in mind going into tomorrow. Moving over to Etsy and Lulu, I've been watching these pretty closely here. We actually got a little bit of a divergence from yesterday to today on price on the 12-hour chart. Made a low on divergence yesterday. We made a lower low in price here today, but a higher low on RSI. And maybe this is starting to set up for a break out of this wedge. I'd still like to see it get above 150. That would be better. But if we can get above this zone and we break out of this wedge, then I'm starting to look up to 112.44 or even 121 or so. Definitely broke below the level didn't want to see broken, but it is holding up here fairly well at the end of day. Otherwise, a little bit of support, definitely cautious here, still at that resistance point despite the strong earnings. So really just being patient on this one, and I'll probably stop covering it here unless it starts to show some opportunity. Moving over to consumer staples and discretionary, you can see they are both falling, but staples is still holding up better. Staples fell 0.78%, discretionary fell 1.06%. You can see we broke that lower trend, broke the 200 SMA on the 4-hour chart on discretionary. Now watching that 143.03 level. So we did break bearish. We kind of expected that. Staples got a big pullback to the 9-day moving average. We could certainly hold here, chop around, and then get a bigger breakout. That would be interesting. But momentum and RSI are saying this is probably done, and we're going to see a bigger pullback, probably to around this 75.40 level. And just below that, we have VWAP sitting at 75.28. Moving over to energy and oil, this continues to crater here. Oil making lower lows, looking to retest this 120.57 level here now. That's my next level of support. If we take those out, then we're watching these previous lows down around 116, and the wicks are down here at about 114.50. So definitely looks like this could go much lower. Oil and gas looking weak. Energy sector also looking weak, making a lower low here today, testing support at 83.55 and the 144 EMA, which is at 83.38. Overall, looks weak. Be patient here on both of these. If we get down to this 80.63 level and start to show some support, that would be interesting on energy. But below that, I have 78.47. So quite a bit of room here from where we are now to my next two levels. And like I said, be patient on both of these. Moving over to transports here on the daily and the weekly. This is cratering pretty aggressively here now. So we got the big gap down fall to support, gap through, break, continuation lower. We're now at the lows from this previous consolidation. If this level breaks here, you can see I have a next level of support at 207.38. That's the lows going back to mid-June of 2022. If that level breaks, then we're looking at these next lows at 196.20. Momentum, super bearish. Be very, very cautious if you want to go long transports. It's actually a pretty bad idea, so I don't recommend it at all. Transports looking super weak, looking down to 207.38 in the next session or two, in my opinion. And with this kind of momentum, you would expect that to break, and then we'll get a move down to this next low. And if you think something like that can't happen on transports, definitely look back to September of 22. Huge red bar on the week, followed by a huge red bar on the week. We ended up going from around 236 all the way down to 196.20 in just 3 weeks. Not saying that we're going to get another iteration like that, but if we do, we're definitely going to be in trouble pretty much across the market. So maybe this is an early indicator of that. Definitely keep an eye on transports. Big time indicator of bearishness in the markets. Moving over to semis, we actually got an inside day here. So we got a little bit of a bounce on all of the AI talk that's propping up names like AMD and NVIDIA, which did prop up this market a little bit. Came back and retested that 240, 249 level, got rejection at that point. You can see that longer term trend line here on the hourly chart right at this level. Not sure how that works out, but we tested that and broke down as well. So inside candle, generally a reversal type setup. We're in this previous zone of consolidation. Maybe we see a nice push back up to 248.10, retest this neckline, and then get the continuation lower. That's assuming that we get above 242.49 in tomorrow's session. I'm not sure that that's going to happen. This still looks super bearish to me. Definitely would be very patient here on semiconductors. Like I said, it is a higher low setup, definitely an inside day, potential reversal on candle pattern, but momentum here, super bearish, RSI, super bearish. And I would be pretty cautious if I wanted to go long on semiconductors. And even if you go long and get a little bit of a push, I would expect that to be fairly short-lived, and that we have all these EMAs and VWAPs sitting up here waiting to push this stock back down. So again, be patient here. Short-term rallies are probably going to be met with sellers, in my opinion. Moving over to yields here on the daily chart, I just want to highlight how strong of a push we saw on the 10-year yield. Definitely what you like to see. The 5-year notes came out today and they closed at around 3.5%. So that was a nice showing here. That's probably propping up the longer term bonds. And we have a nice divergence between the two as well. So 2-year note stayed pretty much right where it was. It's actually down 0.15%. 10-year note actually went up 1.3%. Which indicates to me we're getting a nice push out of inversion. Moving over to stocks above their 20, 50, and 200-day averages. Not much to say here. Everything is super bearish. We're falling off a cliff on all of the charts. We broke all of the major resistances that I was looking at. Next level here on the 200 is sitting at 43.55. Looking at the 50-day, you can see 32.22 as the next level, quite a bit lower, and then 16 here on the 20-day average. And I want to zoom in here a little bit on the 200-day average because we do have that head and shoulders type formation that we've seen across multiple different charts. Left shoulder, head, right shoulder. I know on the S&P 500, this did kind of go a little bit higher. So we have divergence here. This is a lower high setup, and now we're falling off. If we take out this level here at 36.23, there's a big likelihood that this is going to go much, much lower, and that's going to be super bearish. The last time we were in a zone like this and we broke below these levels, it ended up breaking down to that June low, got the rally to that August high, and then made that lower low all the way down at 1084. So if this ends up culminating in that kind of a move, we do need to be very careful here as this continues to set up to the downside. Moving over to the dollar here on the hour and the daily chart. We didn't quite get what we wanted here, so I was hoping this was going to come back in, maybe dip a little bit, maybe into this zone, find some support, and then rally up. That was going to push markets down. That's what I was kind of hoping for here, but we ended up collapsing, retesting this area of support, overshooting it by quite a lot here, and making a lower low. But looking at the daily chart, that was a wick. This area did hold. Now we're waiting to see what happens, right? So if we come out, find resistance and collapse and make a lower low, that's probably going to be bad, and we'll probably see stocks rally on that. Otherwise, if we come down, find this area of support again, then we rally up to resistance, that's probably going to be the time that we start to break out. You can see we're actually starting to wedge up here as this area of support continues to hold and we continue to interact with this trend line on the daily chart. Still waiting to see what happens if we break up or down. Certainly could go either way at this point, but as we continue to hold this level of support at 101.25, I do think this is eventually going to break higher, and that's going to push markets lower in my opinion. Moving over to JNK just for a moment, you can see we continued to fall, coming close to that 200 SMA on the hourly chart. We also hit the 200 SMA on the daily chart, and we stopped right on top of it. 91.82 is the level for the 200 SMA. We'll see if this ends up being a little bit of a bounce. My guess is that it'll be a candle break in continuation, similar to this move. Come down, retest this support. Then we'll see what happens. Overall momentum, bearish, RSI, bearish. And with the market and JNK move down together, you would expect that we're going to have more follow through in the coming days, in my opinion. Move over to TLT here. What a dumpster fire. This is some tough trading in here. So we thought we were going to get a continuation, pick up the 107.44 level, push up to 108.84. That's what I was looking for. But then we found strength in the 10-year yield, and that pushed TLT lower. We wicked out the highs and then sold off. Testing the 200 SMA here on the daily chart. Stop just above it here. After hours, we're at 105.80. 200 SMA is at 105.77, so we're just above it. Certainly could get the candle break continuation lower, but momentum is still bullish, moving in the bullish direction. RSI right at the SMA certainly could bounce here. That would be interesting. But if the 10-year continues to rally in tomorrow's session, then TLT is probably going to continue to chop sideways in this zone. Definitely tough to trade in here. You can see gaps everywhere. Really, really choppy on TLT. So be careful in here if you're trying to trade it. Really, at this point, I think this is probably an investor's tool. Your best bet is probably to invest in TLT if you think it's going to rally, because this trading in here on the short term is very tough. Moving over to the VIX and the VVIX. This is the volatility index for the VIX. I've seen some people talking about it, and we're starting to see a little bit of volatility in the VVIX. You saw a couple of days of push higher, and we're establishing some higher lows as we go on the VVIX, indicating that there's potentially an upswing in the VIX coming. We've been seeing that trend higher in the short term, so it's not any new information. It's just kind of a confirmation here. We're starting to see this pull back. We're at the SMA on RSI. If we break back down here, we might see a little bit of a rally. That would be interesting. But if this bounces from this level and we go higher tomorrow or the next session, then we're probably going to see more lower prices in the markets, in my opinion. Moving over to my results for the day, it says I only made $3, but I don't think that that's quite true. My account value for yesterday was $97,117 or $16, so I should be up. actually a few $100s, about 220 or so. So I'll take a closer look at that. I'm not sure exactly how they calculate these totals or these P&Ls on the day. You can see I made a decent amount here on my IRA, so that was nice to see. I continue to trade puts here on the Qs as long as I can, as long as I have enough money to keep doing it. So I'm down here at 309 on my IRA for 2 days out. I didn't really mean to do that, but it's okay. I got 74 cents credit on that, and I'm down at 309. I might roll that up tomorrow based on what we see. You can see after hours, the Qs are up to 313.61, up from around 311.87. So we're rallying here after hours based on the earnings. We already talked about it. In terms of positions going into tomorrow, you can see I have 2 puts here at 310. I'll likely roll those up early in the session if we look strong. And then I don't have nearly as many calls going into today's session. I have some 316s and 317s, 4 calls, so I'm still more bearish than I am bullish. But like I said, these earnings from big tech is going to affect the NASDAQ more, and the NASDAQ really has been outperforming versus the other 3 major indices. So overall, still neutral on the NASDAQ. We ended up rallying on the day, and I do think we'll probably get more follow through to the upside, in my opinion. Let me know down in the comments what you think of all of these really strong earnings from big tech. Is it going to prop up the markets? Is it just going to prop up the NASDAQ? Or are we eventually going to continue to break down like Tesla? Definitely like and subscribe if you got any value out of this video. Make sure you check out the Patreon and the Twitter and hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.